Good afternoon, everyone. It's Brian Caprice from Key Trading Simple, and welcome to this week's Nadex weekly charts and analysis. January 12th, we're almost, we can say this, we're almost halfway through January already. We got 2 more weeks till Chinese New Year, so that's coming right around the corner. Minutes ago, we just finished up the testimony from Powell. There's plenty to discuss about that and some of the headlines, and I don't know, maybe, any of you fans of Marvel and the multiverse. I feel like that's what we just listened to and watched a little while ago. So yeah, we'll talk about that. So we have so much stuff to talk about today. Let's just get dive right into things so we can start kind of grind through all this. For those of you that are new that don't know who I am, I'm the president and CEO of a company called Keep Trading Simple. I've been trading since about the 1999 time frame. That was actually the first time that was my first trade place. I always loved the idea of the markets before that. Won a contest in I guess it was high school, a trading contest, and I remember GlaxoSmithKline was my stock that I won with. But yeah, I've been doing it a lot longer than that, than that. But my first real grown-up trade was 1999. Learned stocks, options, the traditional routes, and then found Forex. Got into futures. Spent some time traveling around, teaching people how to trade the markets. Decided that to really take myself to the next level, I had to go on the inside. And I actually worked for the advisory division of one of the big 3 banks. Got the opportunity to work, quote, on Wall Street. I actually used to walk past the New York Stock Exchange every morning. It was very awesome to see. Actually, if you look out the front of my office, the bull was right there. So I used to see all the people, rubbing the nose of the bull and stuff like that, taking tons of pictures. So definitely was down there. Got to go where, floor traders and big names were in the financials district in New York. So very cool experience. Got a great education, learned about bonds, but really found that my true passion was teaching people to do it themselves. And actually, it's funny. A number of floor traders actually came in, and I would always ask them, why are you here? He's like, well, because what I used to do 20 years ago doesn't work. I need help. So it was always kind of a great way that I could help people, even people that were successful at one point, being on the floor. So very, very cool. Now I basically stay at home. Obviously, with the pandemic, I am not traveling, not at home, but I've been doing these presentations for Nadex now for probably like 3 years, I feel like. 3 years, almost 4 years. Love sharing with you guys. My analysis is a little bit different. I'm not overly reliant upon indicators. So you guys are not going to see MACD, RSI, and the other 8 million indicators that exist out there in the world. I'm a price action trader. I read candles. I use supply and demand to, basically, if I like to say, I'm an if this then that based trader. I don't have a crystal ball. Sure, I would love it if I do, but I don't. So a lot of times when we talk about things, when they work out exactly as planned, I always joke, I'm always joking that, hey, listen, I don't actually know, right? I don't actually know what's going to happen, but, sometimes it happens like that, and, that's what it is. So at the end of the day, I'm no different than anybody else out there. Everybody, if you guys are interested in getting educated, again, put the time in on the charts, and you guys can be where I am. The agenda for today, actually, let me cover the Nadex risk disclaimer before we cover the agenda. But everybody knows this. You guys have heard it before, that trading on Nadex involves risk and may not be appropriate for all. Now, members risk losing a cost to end of their transaction, including fees, and you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience or financial resources. Any trading decisions that you make are solely your responsibility at your own risk. Past performance is not necessarily indicative of future results. None of the material None of the material included herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. Pretty soon that'll be changing. That'll be crypto.com, I believe, as long as it gets approved. So it'll be interesting. I'll have to update the slide as soon as that deal is finished. Now, the agenda for today, I'm going to cover the upcoming news events. Obviously, Powell speaking is an absolutely blockbuster major event, and that just came through a little while ago. So, okay. But that will be, hold on, sorry. Everything decided to go off all at one time, like normal. It's like, hey, you're streaming. Let's, send 12 things through at one time. We'll cover the rest of the upcoming news events. Actually, the next 2 days are actually very, very big days. And again, I'll kind of explain what was happening with Powell's speech and really kind of how that affects the rest of the week. I mean, obviously, CPI tomorrow is an absolutely huge one. And then PPI the day after that, it's going to be a week of inflation. So of inflation talk. So that's something that we're going to definitely want to cover. And then we'll dive into indices. They've been it's like a tennis match right now, because Powell said one thing, they went up, then he says another thing, they go down, then he says another thing, they go up again. But now we should have some stabilization at least until tomorrow morning. So we'll see how we can play that for the rest of the day. Then we'll cover Forex. Obviously, a lot of what Powell is talking about is really, if you kind of pull back the curtain of all the pleasantries and everything else, it's really kind of getting back to, are we raising interest rates or are we not? Other countries have already started it. We're kind of behind in the curve there. Again, 39-year highs, we're definitely behind the curve. But again, this is where currency, the largest market in the world, is really taking over. So I know a lot of people are like, nah, I trade futures. I'm not a currency guy. Well, you're missing out. There's a lot of opportunities in currencies. And then last but not least, commodities. And again, commodities are affected by the price of the dollar. With world happenings right now, it's definitely a big deal. With Omicron right now, commodities is definitely in the light right now, particularly things like oil. We saw, I don't know if you guys saw it a little while ago, Monday's COVID figures in the United States. Again, you can't say Omicron because it could be both, all the strains, right? 1.3 million positive cases on Monday. China is also starting to lock down, and again, with the Olympics getting ready, big question is what's going to happen with the Olympics and all that. So again, commodities is quite a big round, particularly over in the oil, the oil group. So we'll cover all those today, and we'll kind of see what the opportunities look like for the rest of the week. As I said, with some of the releases, with Powell talking today, and again, we'll talk about it in a second. But with what he has to say, CPI, which is the data, not just his opinions, and then PPI, it's kind of bam, 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 bam this week with news releases. So we'll make sure we get in there. That said, let me switch across, and we'll just go right in and start covering that. So the biggest news today, obviously, was Powell speaking. So much to mention about that one. Again, you can go to any of the news sites, and there's like really a whole list of things out there. The rise of inflation, much of the rise in inflation is due to pandemic-related disruptions. Yes, but also no. We've had inflation in the past. Inflation is not something that is new. It exists in all economies. Is it maybe exacerbated by the pandemic? Sure. But it's not the pandemic that caused the price rise. It was the low interest rate environment and the free money that started it off. We've seen inflation. I mean, look at the housing bubble. There was no pandemic in the housing bubble. And again, there's massive inflation over what the actual real values were. At the end of the day, if someone's willing to pay for it, sure, that's the real value. But really, was it worth more than it was? Was it better, build up more than it was later? No, it was kind of a bubble scenario. So, and again, inflation at 39-year highs. It's easy to blame it on the pandemic, but kind of harder to when you kind of peel it back a little bit. A couple things I feel like we need to point about, mention. And again, the markets are reacting accordingly. You're seeing dollar weakness pretty much across the board. And again, the reason why you're seeing that dollar weakness is purely because every single one of his statements he just made was really in exact contention to what the FOMC meeting notes were from the week before. I don't know. There's not even really any way that we could candy code it to make it seem like that was the case. Here's his comments. At some point, perhaps later this year, we'll allow the balance sheet to shrink. Okay. This year we'll, in all likelihood, normalize policy, including raising rates this year, and may start the balance sheet runoff later this year. Asset purchases will end in March. Kind of a, yeah, we may let it run off. Maybe. Very dovish tone here. This is very, very weak for the dollar. But the indices should absolutely love this. This is great for the indices, and we saw that. Another one is inflationary pressures on track to last well into this year. Okay. Last year, the term was transitory. They were obviously wrong on that one. And if they do, our policy will continue to adapt. The policy hasn't adapted in over 2 years at this point. That's why we're at 39 years high. So this is that kind of multiverse. I'm not exactly sure what they mean. And if they last longer, that would require policy responses. 39-year high. That doesn't require a policy response. And again, this is supposed to be the president for all, right? For all man. And, again, not to be political, but again, the people that this is hurting most is kind of lower income families, and doing absolutely nothing is hurting a majority of the population. So I'm not sure, what they mean here, and again, why they're allowing it. But again, that's what Powell is saying. The Fed has made no decisions about timing of monetary policy actions. What? It makes you scratch your head. Some of the comments we saw earlier today from Bostic, one of the board members, Bostic says he now sees three rate rises, right? Bostic says inflation is surging, right? that we need to make sure we get through, right? We need to take control, which all of the Fed presidents are. And then Powell's comments are, yeah, we've made no decisions yet of timing. We don't know. Maybe later this year. I don't know. That is not what we're really kind of looking for as the general public. And the market, I think, is very, very confused what the heck is going. Wage increases are skewed to low income end of population. Yeah, but the wage, and again, this is very important. Again, the wage increases are going towards the people that need it the most. But at the end of the day, what's outpacing, inflation or low income? Right? The low income, it's not increasing at the same rate that inflation is. So it's great that, yes, it's going to the people that need it the most, but it's not outpacing inflation. Okay. And a lot of this, when you look at wages and things, yeah, there was things like Social Security raises. So in the end, I'm not exactly sure what Powell and where he's living. I know a lot of this, and this is my personal opinion, guys, and I hope this doesn't offend anybody out there, but I feel that at this point, this is almost like a puppet response. The market did not see it like this whatsoever. If you're looking at the charts, again, the way we're going to be trading this is saying, listen, this is an extremely weak statement by the Fed. And again, nobody wants a market crash on their watch. But again, remember, a pullback in the market, recessions, things like that, those are natural cycles in the market. It's like anything else in the world. Is you have that impulse and you have corrections and they go up and they go down. And we're in like the longest bull run ever. It's due for somewhat of a pullback. You need to trim the excess. You need to get rid of the inefficiencies in the market. And we're not allowing that with this low interest rate environment. So it's only making the situation worse. And again, going to be rough. Now, the market will react. And again, let's talk about what's next. Okay, tomorrow morning is CPI. This is the actual gauge of inflation. It's not Powell's opinions. It's not my opinions. It's the actual true CPI readings. Now, remember, they are starting to change around what they're using because they said, well, it's not fair to use the CPI readings when, we're dealing with a pandemic. So, of course, it looks like it's higher than it actually is. Yes, that is true. They will look like it's actually higher than it is. But you have to maintain consistency. To talk about job growth, which is another economic reading that we get with non-farm payroll, you're not changing around kind of those data. You're claiming that, all these jobs are being created because you're cherry picking data from the bottom and kind of the down run of a market. So they're starting to mess with numbers, but the reality is, and again, there's no fudging this, that we're having an increase again in CPI. So the inflation is getting higher yet again. And it's not as much as it was before, but if this is a number to the top side, the market is going to come down hard. The dollar is going to increase, and tomorrow morning the indices will crash. Okay, core CPI, and again, if you want to know what the core differences are, you can go in here and look at it. Again, we know that most of the inflation is in energy, right? They're blaming it all on oil. The core is excluding food and energy, so it strips that out. And guess what? That's even higher than the overall core. So again, that is starting to pick up on everything else. All right. So again, yeah, we'll adjust it. We have no plans. I don't know what he's looking at. This is going up. We saw wage growth is not following this suit. Again, inflation is going higher than wage growth, so people are getting hurt and they're not adjusting. So God forbid this comes in at 0.6 or this comes in at 0.5, right? Above what the expectations are. Look for a big pullback in the market and quite a crash very, very fast. Now, crude oil. Supposedly it's all over here in crude, right? Last time we didn't have as much of a down draw as what they thought. We had a couple of readings that were really big numbers, and then last time they finally increased, and it was like, oh, it's not as bad. They haven't given us an actual forecast number on it yet. When I click forward and backwards, they're not actually giving it to us. But it is Tuesday. We do know, and again, oil went back up to an orange. It was yellow. We do know that we have the API inventory report later on today. Okay. Now, as you're seeing, the core is higher, and again, oil's not involved with that. So this could be a very interesting number. And normally they have a published kind of inventory. Not having it shows me that this is something that could sneak under the radar. There could be an amazing opportunity tomorrow morning. We'll cover it with oil, but again, the oil chart's a little hard to read now because we have really 24 hours before that news kicks in tomorrow. But again, after CPI and the dollar gets smashed around, great opportunity tomorrow. Bonds, I'm not going to deal with bonds as much, but again, the bond auction is important. Again, interest rates have an inverse relationship with bonds, so the 10-year is kind of something out there. I would say this is more for the advanced users out there. But not something I want to cover today because it's kind of more of a different spectrum than what we're covering. Now, we have PPI on Thursday. PPI is another gauge of inflation. It kind of falls in with everything else. And again, now we have FOMC member Brainard speaking. And you may say, well, why is that important? right? She's due to testify on her nomination as vice chair of the Federal Reserve. Basically, what they've done now is said, oh, she's taking over next after Powell is out, okay? So they're kind of trying to set it up for the next round. She'll get asked some very, very difficult questions. I would not be surprised at all if some of her statements are in, I don't want to say conflict because they're all supposed to be part of the same group. But remember, she's a voting member of the board. I wouldn't be surprised if her opinions are very much on the opposite end. She was traditionally more on the hawkish side, especially with rates and changing things, and even things like the digital dollar, where Powell is basically like, what? What does that mean, digital dollar? She's been very, I would say, very central on, we're going to have it. We need to be first. We need to lead, and that's kind of her department. So crypto, Bitcoin, Ethereum, any of the coin traders out there, she is the kind of end all. She is the one that is going to take the dollar in that direction. And again, in my eyes, really make that a bit more difficult between what she wants to do with the digital dollar and controlling it. And again, at the end of the day, none of the cryptos are, green. Again, if we're canceling pipelines and jacking inflation because we want to watch the greenhouse effects, crypto is on at the same time is not. It's very anti-green. So if we're going to worry about climate change, crypto is also could come under. So kind of two major components there. Friday, retail sales numbers. Okay. Now, retail sales numbers are supposed to be a little bit smaller than that they were. Neither of them is a negative number. And again, retail sales in general, this time of year, they're always a little bit weird just because of the holidays and what we're spending and where does the data go and how much did they spend. What we do know going into the earnings season is thus far, everybody has just been blowing it out of the water. So retail sales technically shouldn't be negative. I'm curious to see what it comes in. Expect the tone right now is that this is negative. So literally between Powell speaking and again, his was the exact opposite of what the FOMC meeting notes were last week. The core CPI could lead to market crashing. PPI could lead to market crashing. And then again, Friday, if these numbers do come in negative, that we saw a reduction in retail sales. And again, remember the retail trader out there, the retail spender is really what drives the economy. This could lead to kind of a negative day, and then we get cap off the week with a negative day. Now it's expected to be negative. So, as far as the odds go, if it does come in lower than expected, it can be swayed negative, but it's not really, they expected it. There's more of the ability to kind of keep hold of what they did previously. So I would say there's more positive upside from this, but after 2 major days that we see inflation both days and then core retail sales comes in, it's a red week. Okay, it's a red week, and I think overall for the week, again, when anybody's going to, any speech about it, it's been kind of more of a, time to go strong dollar. But, like I said, Omicron has been the big major factor. So, besides that, this week it's strange. You'll see, like I don't have it. You'll see I have all currencies, all nations listed here, right? But you notice it's absolutely dominated by the U.S. this week. There's not really, and again, I guess I should put it to there because it's next week. There's not a lot of other it's like every other country took off this week. So right now, headlines are going to be dominated by Omicron numbers. Some of the data we saw earlier was down here. I saw it within 6 to 8 weeks. Where is it? Omicron may infect half of Europeans in the next 6 weeks. Okay. Pfizer said, hey, we'll have an Omicron vaccine out in the next 2 months. Right. But over half of Europe will already have had it at that point. So it's kind of like that's a going forward thing. And again, the United States with record numbers today, again, not necessarily what you want to hear. Hospitalizations are surging, but it's just the sheer number of people. And then the other positive aspect, again, it would be nice to know. We've always never truly known the real numbers out there. There were some very difficult questions asked yesterday and published, and it was said that it was going to be researched more, that of the hospitalizations and things like that, how many of them, and deaths in particular, how many deaths were due to COVID and not some other underlying issue? They've asked for that data because they said the data is probably skewed. And they said that there's a large chunk of the population of people that are, quote, hospitalized. They went into the hospital for other reasons beside COVID, and then they incidentally tested for it. They're thrown in the numbers. So the numbers may not actually be accurate. It's like, say, hospitalizations are surging. Well, yeah, people are doing more stuff. They're getting out. They're shoveling snow. People still have other problems as well, especially when they move around a lot more versus being locked down. Maybe the numbers are not 100% right. I mean, COVID is here. We're going to have there's no such thing as COVID zero. So, and again, as it affects the market, again, we can do what we can do. Headlines and things like that are important, but overall, watch these large economic releases, particularly because they are dominated this week by the U.S. And looking at this on a kind of a bird's eye view, a lot of short opportunities in the futures market. All right, so that's what we're looking for the rest of the week. Right now in the currency market, I mean, the pound yen is the biggest mover. Again, dollar CAD also at 93 is an absolutely smashing number to the downside. Dollar weakness, CAD coming back. We talked about CAD strength last week as well as we talked about pound strength. You can see that the pound is outpacing the euro right now. We talked about this euro pound going down again this week. And again, just because of how large the European Union is. And then again, the Swiss is finally getting a little bit of a reprieve here. But again, it's more the dollar, not the Swiss at this point. So let's go in and let's look at these charts. All right. So we normally start with the indices, and I would like to start talking about the VIX. Now, had you attended yesterday morning's session, we talked about, I expected, again, we had this huge surge, and then I expected the VIX to start pulling back. And it did. It pulled back all day. And again, likewise, we saw a surge in all the equities. They're all up right now, and they should be. Absolutely. Why is this going down? Well, all the spike this morning was, all right, what is Powell going to say? Right? And there's the immediate drop, an immediate push. And then all of a sudden it was like, well, wait a second. Wait, what? You don't have any date when you're raising interest rates? You're going to do what? And it was a very, very weak stance that led the volatility straight down. Okay. And again, VIX down, especially down 2.68%. All the indices are in the green, as they should be. Again, remember, the biggest, I would say, I don't know, the biggest monster, right? The biggest monster out there right now, the biggest threat to the indices is rising interest rates. Okay. It's not Omicron. We're not doing anything. Omicron is not going to slow anybody else down at this point. It's not Omicron. I mean, I guess if we lock down and everybody goes into, hibernation mode again, it was so detrimental, and locking down last time obviously did not derail where COVID was going to go. I don't think that's what's going to happen again. I can see maybe schools doing it, right? But besides that, I don't think the entire economy is. We're not going to shut everything back down again. It's just going to be okay. Listen, we're getting it. Indices are all in the green. Okay, so lack of any other news. I think the volatility, the VIX is coming back down into the 17 range. It doesn't really have many other buyers, and again, it's not necessarily a supply and demand driven event. But looking over across into the indices, this is kind of what we had this morning, right? It's on a 15-minute. I mentioned this morning for the 9 a.m. session, I liked how we had kind of a Harry Potter type pull-in, right? Again, looking at this, top to bottom, and it doesn't matter if I switch it the other way here. I can switch it the other way. Some people say, well, wait a second, that was down to up. Yeah, you're right. That was down to up. So let's go, or that was up to down. Let's go down to up. Okay. You can see we talked about it breaking through this level here in today's session, this 46.54. They were all more or less the same, right? We knew we had buyers sitting here. And again, in this grand scheme of pullbacks, this area was right around the 50% retracement level. We had a little Harry Potter, and again, it pulled down. It ended up cranking the target, came back up at 10:30, and then came right back down and blew through that 1 to 3. So there was actually two different opportunities, and I think that was the right call. Both of them bounced right in that 50 percentile range. The second one's a little bit shy. And now we've punched higher. And again, this is that weakness about, we don't know when we're going to raise them. We'll make a change to it later. Again, that very passive stance on it. Again, that is what has led us higher. Now, where do we go from here? Okay. So again, there was two great opportunities this morning. And again, if you're missing these morning sessions, make sure you follow us on YouTube. But one of the things I'm going to point out over here as well, before I forget, you'll see oil is up at 81. And the reason why oil is back up 3.5% is because of the same spike. If we're not going to raise interest rates, we're not going to start crushing the economy down. Oil is like, hey, I'm into that. I'm off to the races. So, and that's why you're seeing oil, gold, and silver all higher. And that's why the indices are up. Now, we are at a level where we've seen some sellers. I would say at this point, though, I mean, as of right now, I mean, we're at lunch. That's why you're seeing it kind of stabilize. If you take what has been talked about, right? If you take what has been talked about, nothing really, I would say, is really kind of, there is nothing, I would say, earth-shattering that we could say this afternoon that should derail anything. Everything was considered weak, but we need to prepare for tomorrow morning, okay? I'm kind of looking at the level up here. It's not the freshest of levels, but it is a large psychological level up at 4,700. If we get up there today, then yeah, I can see a potential rollover. I mean, this is a parabolic move. We do kind of expect there to be parabolic reversals in. So the reality is, we'll see how the market takes it. although again, on a purely technical basis, this should be where we're selling. Nothing that Powell said should be considered inflammatory, and technically it was all great for the market. The problem is everything that Powell said now has moved the market, and the reality is this afternoon they're going to start talking about, okay, listen, we got CPI tomorrow. Okay, how do we prepare for CPI? Because the CPI number is not an opinion. It is cold hard facts of what inflation is doing, and it has to be addressed at some point. Okay, everybody thought it was going to be addressed by now. So on a purely technical basis, there is a short here, but it is 12:26 in the afternoon. There's not a lot of volume in here. The volume kind of soaks up. For those parabolic retracement traders out there, and again, I'll leave this over here. If you guys were looking to get into something, there are no buyers slowing this down. And in reality, let me see, I can take this. Actually, I don't need either one of these zones now. Let's see, bounce, bounce, bounce. Yeah, I don't need it now. It's finally pushed through and gotten out of those. I would say right now, there's, on a purely technical basis, there's nothing stopping this from coming all the way back down again. Can we run all the way back down? Sure, we could. If CPI was right now, I would absolutely be looking to get short this position. But right now, being low volume, you know, people should be happy with what Powell said, or at least the stock market should be happy. It's definitely more of a positive tone on what they could, you know, where it could go. I would say to the downside, again, I'd look for buyers to step in at 46.33. I don't think we can get all the way back down there today. But if so, it just goes to show you that, again, this would be kind of that retail trader spike. Now that it's propped up, again, it's time to start shorting again. So, but two levels I look out for is one, 4,700 right here, right? The other one would be probably down here, 46.30. Right, 46.30, kind of where this took off from. And again, it's at a 50% level. There'll be people that are, you know, there'll be people out there that are like, look at that. Told you I got, you know, I traded the 50% retracement. Really, it was just good timing. I mean, again, there was buyers there in the past, and again, it was just, you know, you can see it immediately shot back down again. So, yeah, a little bit risky for just pure fib-based trading. So, I like it today. I like the 4,700 much more than I like this level, but on a purely technical, you know, technical analysis-based trading parabolic move, there should be shorts coming into the market right now. But overall, I would say, you know, I like this one long, but before CPI tomorrow, I am definitely, without a doubt, looking for shorts. Okay. NQ. NQ looks very, very similar, right? Looks very, very similar. And again, we had this kind of down to up. You know, we were looking for this really to come down to 15,100. It was kind of using this to forecast. Unfortunately, it didn't come that low, so the forecast on it really didn't make much of a difference. But I did say that I really like the zone here. Yesterday's momentum ended up driving through the zone, but you guys can see we had that standard Harry Potter off the top where, yeah, we were looking to short. It broke. We were wrong. And then came through and then gave us the long trade on the top side. So again, remember our 1 to 3 risk reward based trading. Yeah, we were -1, but then we got it on the top side. It ended up being, you know, +2 because again, we lost 1, made 3, and it came right back up to the top. Now today we had the same kind of a push, and I don't think this one had as much. Yeah, this one did not come back for a 50% retracement. You guys will notice that where it stopped was also at one of our solid black lines, and I'll continue this across. It's the same type of technical setup where we're coming back up. We had a huge push in price, right? Parabolic move all the way up into an area of sellers, and it just happened to be right at 15,800. So it is kind of set up the same exact way. You know, remove all things of what he said and just basically, you know, again, remove all fundamentals and only follow what the chart tells you, right? Pure technical analysis, you're in a short right now, all right? And again, looking at profit targets down here at what, 15,700, but ultimately you can probably get down to 15,600, and I wouldn't be looking for true profit down here until, I don't know, 15,500. 15,500 is sitting right here, right? Let's put a horizontal there. We should have one there. 15,500 right there, which is a, you know, big psychological number. You can see that's exactly where it bounced off of. So it's not coincidence that it turned here and then stopped up top. Okay, it's not coincidence that it's hit those things. So, and you'll see that. But right now, again, pure parabolic move, we should be retracing all the way back down into the 15,500 range. The YM. So the YM is the only one that is in the red, and it kind of did the same thing. What did it do? It came up and hit 36,000, and now we're pulling back from that 36,000 mark. We actually had an old area of sellers sitting right here, and again, there was some basing in there, and we talked about the test here. That's when it came up and tested it and dropped down. It's not really like a zone that we'd love, but it's kind of the same thinking. So we had our bounce. Obviously, we came through, so let's delete this. Let's pull new fib levels from low to high. Whoops. And you can see this was a little deeper, right? We came all the way down and grabbed the level down here at 78. So Yeah, it's, again, very fast move, parabolic retracement back up again. And again, now we found those new levels and we're pushing down. So, I mean, YM's there. I would say that YM, I would probably be a little bit more careful. It's showing that it's currently the weakest. And again, it is going to be most sensitive to tomorrow's. Actually, I guess that's not true. YM and Russell will be very, very sensitive till tomorrow. Russell is more like we need to raise interest rates. Okay, Russell's going to be bad. But right now with earnings and everything, I would say that, again, CPI and PPI, which is the purchasing managers index. It's not PPI, but what is it? The producers pricing index is kind of what a more important gauge of manufacturing. That's more associated with the Dow. So I would say tomorrow, I'd say Russell and probably ES are going to be more exposed to CPI, but PPI is more of a YM based number. So yeah, same thing. I mean, this one has a confirmed red, green, red confirmation down. It probably continues to push lower. And again, it's just because the reactionary move. And again, this really shows you the move down with Powell's speech. And then what he said was like, what? Kind of pushing back up again. But the reality is nothing has really changed. Dollar increases is coming. This should continue to push much, much lower. All right. Russell. So Russell, it looks almost exactly the same. Russell, we can do the same thing. We can draw, bottom to top. You can see that this one also came back and was flirting with the 61. It looks exactly the same. It was down in 15 minutes, up in 30, down in 30, up in 30 again. And what we're doing, we're running into the same level of basing. You guys can see the basing level right here, right? Here, basing, punch, touch, down, touch, down. So it's all the same. And again, I would say targets for Russell also on the downside are 21.52. Again, psychological level being at 21.50. They're all the same. I mean, pick your poison. Like I said, Powell extremely dovish comments is what drove this back and forth, wiping a lot of futures traders out today. Everything he said, if there was no other news, is absolutely 100% positive. But again, CPI, you can't deny it. There's no denying that tomorrow's numbers. But we should rally down if this number tomorrow is if this is a 0.2 that we're not seeing the inflationary pressures, and this is a 0.4. If this is lower, that is a huge, huge buying opportunity in the indices. So that's what we're doing kind of on an indice basis over there. All right. We've been covering Apple and Tesla on a kind of just to help out with NQ a bit. As you can see, again, I always talk about technical analysis and how important it is. Looking at things inside, and again, over at Nadex, you're not trading Apple and Tesla, but we use these to kind of trade NQ because they're such an important component of it. I talk about spikes and where things stop at. Okay, I don't know if you guys can see this or not, but this line right here, this is 175. It's on a quarter, right? It ends in a 5. 175. It literally turned on the 175.00. You can see that price not only gapped from there, it's also touched in the past, which was a turning point. These things are not coincidental, just so everybody understands. And again, this is what price action trading is. It's like, wait a second, it turned, it stopped right there. Sellers have been there in the past. This is no crystal ball. This is kind of letting the market show you where reversals are. Now, Apple, again, this is a pullback, huge impulse. Again, I think Apple deserves to be higher. I think it has the ability to go higher. We'll see. And again, it's 12:30, so we have less buyers. Tesla, kind of the same thing. Tesla doesn't have the spikes in around, and Tesla's kind of in its own little world. But again, you're still seeing the up, down, and it's basing back and forth again. But again, typically we use this on a 30-minute. And you can see it probed up into this 10,077. Just happens to be where this gap was, and all this traffic was sellers, 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 sellers. But again, see, eventually this red line will run out, and as it starts to increase, we got a racetrack over here, which means this will also help propel the NQ higher. Okay, so again, if we break through, you guys want to do a little bit of extra investigation. Looks like the break of 1085 for Tesla could be a nice launching point for the NQ and futures, which we can absolutely trade. All right, let's jump over and let's go into currency. So let's talk about the dollar. You may look at this and it's like, why the heck did the dollar just collapse? Well, we have again, some of these comments in here about how we have, where is it? We've not made a decision about the timing of monetary policy actions. So it basically means that, hey, let's let inflation continue to rise and do whatever it's doing. And that's kind of what led this. The dollar be like, what? Straight down. Yesterday, we were talking about, and again, we were hoping that the Europeans took this. And again, the European traders came into the market right here, and they did exactly what we thought of, right? We talked about the European traders providing dollar strength, and that's exactly what we got. It did nothing but go straight up until Powell was talking. Now, we were hoping to be up at the 96, kind of half expecting Powell to make weak statements, in which case we were talking about, hey, listen, we should probably get short this because Powell is known for making very, very weak statements. That's exactly what happened. There's the weak statement. There's the big punch down from Powell, right? But we didn't, the Europeans unfortunately ran out of steam. They couldn't drive it all the way up to 96. So right now I would say I would expect the dollar to retrace again. What is this going to do? It's going to affect the overall indices. Again, we're already starting to see those kind of reverse and roll down a little bit. It's going to bring some dollar strength back into some of the currencies that are already surging, right? You're seeing things like this. Look at this. In the last 60 minutes, again, Powell's been done talking for about 45 minutes, right? Almost 40 minutes. In 24 hours, they're straight up. It's nothing but dollar weakness. But then the more near term, again, the dollar is finally trying to fight and come back a little bit, okay? That's what this is. This is what you're seeing right now, now that Powell is done talking. Okay, but again, this was thank you, Mr. Powell. Yeah, we missed the opportunity. So that's a dollar. So let's kind of crank through some of these currencies. Here's the Aussie dollar. Now, we talked about it yesterday. We were really, really hoping that Powell was going to be really, really strong, but the Europeans seemed like they knew. European market opened right here, right there. This red candle right there is our 3 o'clock, right? If you guys can see it. That is the European session. What did the Europeans do? They drove dollar strengthen because, again, everybody knows that we're going to raise interest rates. Just in time for Powell to speak, which happens to be, again, this is an area. We saw some basing right here. We kind of had a target level sitting right there. That's where Powell kind of came in, right at 10 o'clock, right here. Okay, they drove it right into an area of prior buying. Okay, that has now driven it up. And if I continue this across, so this has already been one trade set up. There's been 2 different entries. It's gone to profit target both times. We just happen to run into the same thing. But now the question is, do we have profit taking? And is this an opportunity to short this area once again? And I would say, yeah, probably. I mean, CPI is going to come in. It's still there. They're still going to raise interest rates. Is this going to be forever weakness? No, not really. What Powell said was an emotional kind of response. And this is the market is a market response to what Powell said, which was what? Right? This what he said. Yeah, we're going to do it later this year. Yeah, as if we won't buy anymore, in March, right? Inflationary pressures, they're going to go later in this year, right? We're going to have inflation all year. And, if they do, it's like, what is it? Inflationary pressures, they're on track to last well into this year. And if they do, it's like, well, are they or are they not? Because they've done it for 2 years, right? Our policy will continue to adapt. They haven't adapted any policy yet, right? They haven't done anything. So, I would expect a response, right? I would expect a rollover. And again, 1230, we don't have the U.S. buyers in there. Probably a good level. There is another one up top too. And again, going into tomorrow, we do have an area. By the way, this turn is also at the 50% fib level, just so you guys know, the fib traders out there, right? There's already been two entries that have gone full profit target. This is kind of the third entry into the same 50% fib retracement level. So not a new level in here, right? But I do think it is a good potential for a reversal. And again, it's been hit 2 or 3 times, but once the U.S. trader comes online, this absolutely should be lower, right? If we manage to grind through and start to base through into this level, again, we know we have another level here, as well as we have another level up top. Let me mark off the right one. See that, bring that across. I would say watch out for CPI tomorrow because we have we got this 72 right here, and we get the 72, 73 up top. So 2 nice levels to take shorts from. Again, we should see the same exact thing. We should see the European market move us around tomorrow morning in preparation for CPI. We don't need a crystal ball to tell us what the data is, but understand that the data is kind of already out there. People know what the data is ahead of time. So look for that trade. This one's already looks like about 1-to-1. Aussie yen. Aussie yen is also going up. Why? Because of Aussie strength. I mean, we saw it. So Aussie yen is a little bit more protected. It's a proxy with a proxy. I would say levels to watch out for. I mean, we have the level up top. We have a level of basing here. This was an old level. And again, not surprised that it broke. We had 1, 2, 3 touches. 4 is what broke it. And it kind of based and ran into that new level. And again, we based in it again. We're kind of getting there now. If the Aussie dollar is going to turn back down again, it is considered Aussie weakness as well as there's a yen factor in this one. So it's kind of set up in the same manner. I would say overall, we can kind of look for this to roll back down. I mean, Australia's having major problems as well with Omicron. As I said, there's a person that said the positivity rate is over 30% in Australia. They're running into the same problems that everybody else is. Right now, this is being really dominated by the yen more than anything else. It's getting a little bit of help from gold and the Aussie. And again, Gold is up 0.8%, which again should be bringing strength into the Aussie overall. But again, gold will retrace back down a little bit. But once CPI, it becomes kind of the central focus. So I'd say there's probably a short in here. I don't expect the Aussie to really kind of rally all the way back up. And again, I left this purple line here. I mean, we have confirmed sellers here that were close. We have confirmed sellers just above it. The 50% retracement level in this one also has fib traders. And again, if I adjust this high to low to kind of bringing it back up again, you can see that 50% level now is sitting right here. The 50% level is now the red. The 61.8 is sitting on the purple. So I don't care which one you want to look at. If you want to look at the old levels, right? The old level was telling us that the purple zone was the 50%, right? Now, when we take the new levels, the 50% is the red and the 61.8 is right on this other level. So again, not coincidence that we are having these kind of overlaps, but watch for some shorts there. Euro pound. So Euro pound is still kind of flirting around. We talked about having a break below this level, and we kind of got it. Right now, this one is down just slightly. We expected this to break and go lower. We're finally out of the channel. We talked about up, down, up, down. It made it about halfway up yesterday, and we ran into some sellers. So it looks like we're now starting to form a new kind of channel here. Big question is how low this one's going to get. It looks like we've run price down to 83.23. Things that I would look for on this one, again, we kind of have this top in here. We have these new, I mean, really back to here, lows, lower lows, lower lows, lower lows. So we are starting to finally break free of that upper channel. I'd say right now, I mean, you know, the trajectory, if we're going to follow, whoops, not that one. If we're going to follow kind of this level here, I'd say, oof, can we push down? I'd say 83.18 is probably where we can push towards. Right? I want to see how much lower we can go. Let me bring this up to a 4-hour real quick. All right, let me look at this. So it looks like next real big target's 83.80. How close are we to that? Yeah, I would say that that's probably in line with where our next push will be. Yeah, I would say this is kind of something, and again, I don't do tons but channels. I can make this look really fancy. Where is it? Not my fib channel. I just want a regular channel. Oh, it's this one. There we go. Parallel channel. What? Oh, I know why. Never mind. Here, down, and up. You guys can see we're almost dead on that one. I would say when we have a break of this the trend line to the bottom, I mean, like I said, I don't know where it's going to come in at, but when there's a break of that trend line, that'll probably give us the ability to get down there. And this level may be kind of a takeoff point, a nice little reversal level. Use it as a target on the downside. But again, whenever we go to break, there'll be a number of shorts that come in. This could be a potential bounce inside of that. And that's right at 83.09. Okay, so keep that on your radar. And it's funny how the parallel channel is almost exact. I missed it by just a little bit, right? And actually the blue may be off. Yeah, look. Yeah, touch, 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 3 touches on the top side, touch, touch, touch on the bottom, 3 touches on the bottom, almost exact for that parallel line. All right, Euro yen. So Euro yen, we had an alert you said here yesterday, and we did pull back and come down and grab it. If we extend this across, we were kind of looking for this to come up, and we're looking for a reversal. We saw all these large candles. We were expecting it to go higher. It gave us the Harry Potter pullback, and again, this was more or less a European session trade. The 3 o'clock candle is sitting right there. So again, we talk about the lightning bolt, right? The up, the base, the pullback, and then again, the takeoff. This one went well beyond its 1 to 3, and it came right up into a level of sellers sitting right there. So again, this would have been a profit target, not necessarily a launch point, but I do think at this point, what we're seeing with the yen, although it's not the best, I like the level higher. There could be a debate on taking this one back south, particularly if you need to trade this afternoon. As you can see, there's not a whole lot of European data to mess this one up. I would say for short targets, kind of the same entry that we were talking about yesterday. I would say that that's probably our downward side target would be, yeah, right around the 130.67, right? I would say that that's probably where this one comes back down to, particularly because, again, we're talking about a decrease in the euro pound, right? The pound strength. That should also lead to a weakness in some European, a little carryover into the European yen. And again, the yen should fight back a little bit here too. So, something small. So far, I like the Aussie stuff better right now than this one. Again, not surprised that this one popped back up again. We talked about it. This was a huge surge forward, and again, it's a parabolic move at 11 o'clock. It's exactly the same. Again, there's alerts up here. We set these alerts. Both these alerts were triggered. If you attended yesterday morning, we talked about how we're going to start setting some more alerts. It's funny. We had the alert down low. But what did we do? We drove right back in the 50% retracement level at 10 o'clock when Powell was speaking. And what did he do? We blew up the dollar and shot it straight up, parabolic move into the upper area of sellers. And now you're seeing it retrace back down again. So again, you should already be short this to the downside. Actually, you could have been on both sides, but you should be short in here looking for a reversal. And it looks like 1 to 3 puts us right there. So again, plenty of room for this to run to the downside. Yeah, nice little trade setup. Again, in both directions. A burst out. Again, that's 40 pips. Plenty of movement there in the shorter duration binary contracts. And again, I think we reverse all the way back down. I wouldn't be surprised by later on tomorrow morning if we come back down. Remember, CPI news is right here. Yep, CPI is right there. So I am looking for really where price is going to be right here. I'll change this to black so you guys can see a little bit better. This dotted line is where the CPI news is coming in. So if we manage to maintain and stay high, we look for a short. If we have driven all the way back down again, expecting strong and we're down low, that could be an opportunity to go long for tomorrow morning. But this magical number, mark it off in your charts. It's an absolute must. You got to watch it. Okay. Pound yen. Pound yen is rallying. And again, we talked about pound strength coming back. We knew looking at the left-hand side, looking at price action, we really had nothing slowing this thing back down again. We had in this grand scheme of things, this push across, we had the 50% pullback push. So we knew that that was coming in. We can erase that now. We're back up to the top. We know we have sellers up here. So I would say at this point, what makes this one interesting is we've hit this level and we've pulled back again, and it wasn't the best of entries out. If we can grind through this, we talked about the euro pound, having pound strength come in on that bottom side of that trend line. If it does not break the bottom side of the trend line, that would be a little bit of European strength pound weakness. That's kind of lining up with what we have, and I'm wondering if that comes in a little bit higher. So right now, all this is a completion of the parabolic move down. We've retraced back up again. I guess let me hear. I'll pull fibs off. We were hoping that the fibs were going to go much, much lower, but we didn't. Let's draw it here and see where potential levels on the other side would be. Actually, I'm going to use that entire zone. Yeah, it looks like the 50% is kind of sitting over here in no man's land. So not really concerned about the 50% in this one. The 61 could be a decent trade setup, right? There is kind of a level sitting right here at the 61. So that may be a potential target, because again, it'll be target first and a reversal to the downside. Right. And I say target on that one because, again, people that are using the 50 as the entry, there's no price action telling me that there is anything happening at the 50% mark. But if it goes in, they're going to use the 61.8 as their kind of getting out phase, right? That's like, oh, that's our stop loss. There are some buyers there, but I'd really like to see a confirmation off of it. But that's where a lot of people will be getting out, so it'll act as a magnet pulling it down. But right now, like I said, we're sitting at a level here, but European market is closed. The pound strength is going to really dry up right now. This is purely the yen. And I think the yen probably reverses a little bit from what Powell said from 10 o'clock. And remember, what Powell says really doesn't dictate much inside of the pounds arena. This is a lot of strength coming up. So it's yen weakness, but we should have a reversal at this point because everything that he said now, it's kind of like, well, wait a second, CPI says that this is going to happen. So we should kind of have a reversal back down. Pound dollar, not surprised. Again, what do we see? Europeans, and look at this. This is dead on. Dead on. Europeans right there. That's where the European market opened. They drove it straight down again. And where did it base? 8:30. There's your 9:30 window. Where's the opening candle at 10 o'clock? When Powell started speaking, drove it straight back up. I would say that this one also is probably more in a down run. We can look for this to reverse back down, potentially over into the level right here. I'd say profit targets on this one would need to be around 135.76. Let me take it at the right green. And again, we knew that we had sellers sitting up here. So, would have been nice. It would have been a nice little target, down, up. Let's see, how much was it? Yeah, it's 50 pips in an hour and a half. Again, we talked yesterday about those shorter duration binary contracts, and I said use the 9 to 11. You can see that from 10 o'clock when he spoke, when you should have been looking to get into this position, or even the 9:30 candle with this basing. Again, you jumped at the 11 o'clock candle is right where it ended, right here. So full measurement on that one from when he talked to 11 o'clock where it ended, 43 pips. Go figure out how many strike prices that is. That was an absolutely amazing trade setup today. And it did. It pulled back to a level where you expected buyers to step in. So again, pretty much telegraph that one. I'd say do the same exact thing for tomorrow. We know that this is an area. Actually, the area is here. Here's the basing right here, the top of the bottom. I would say look for this area as a potential area tomorrow for CPI. And again, do the same exact thing we just did in the euro. Take this, mark it off on 8:30 tomorrow morning. At 8 o'clock, start looking. Has the dollar recovered fully with dollar strength preparing, or are we still holding firm up top? Look to see what the Europeans did. Again, Europeans did nothing but just drive this straight down in time for the US trader and Powell to get on for it to pop back up. So if we say the same down draw tomorrow, look for CPI to spike it. If it's low, look for CPI to spike it up. Okay. Dollar CAD. So dollar CAD drove all the way down. And again, this is the same weakness. You can see that this one held more or less firm. Here's 9:30. Here's the 10 o'clock candle. Again, this is not really set up for a European, or I'm sorry, the Europeans did nothing with the dollar CAD, right? And oil is rallying. And then again, dollar weakness, oil strength, everything straight down. Again, this level is not going to hold. News from the Fed interest rates, this is not going to hold. So it didn't. We're actually going to turn this yellow because we may get a pullback to it. Let's see where we can stop. There we go. Yeah, I'm going to pull these dots across right there. Actually, this is where we're at right now. There is a previous set of buyers in the CAD, 125.92. I don't need this. Let's bring this all the way across. And magically, that's what we're bouncing into right now. So, although I do think dollar weakness is going to creep back in again, with that weakness, I think that oil is going to remain higher. If I had to pick dollar strength or oil strength, I think I'm going to go with oil strength right now. And it looks like the dollar CAD has recoupled itself back to oil. So what I would say on this one, the only recommendation I can make is look to see with the API. And again, type this in. If you guys are not accustomed to do this, it comes out end of day. Type in API oil inventory reports into your browser, and you'll be able to see the list. The one that I use is typically like on investing.com or something like that. Actually, let me see if they have, they probably already have it. API oil inventory. Let's see if they've already updated it for tomorrow. Stay ahead of the curve. Yes. No, they still have the January 4th one. They don't have the new one up yet. I was trying to see if they already had it. I could probably find it. Let's see, markets. Where is it? I don't have the calendar up. It's unfortunately I can't do it. There's too many things on that list. But crude oil, Brent oil. Let's see, real time come on. I was trying to see if they were going to give me the report for tomorrow. Nah, it's not going to give it to me on this one. I'd have to find it in here. But again, that API oil report today should help oil move around in the European session. So when you find that, again, if that is a big number again, we can look for this to continue to push to the downside. We'll see if it bases in here. I wouldn't expect a pop, but I think we'll have continued pressure. I'm very, very curious if we're going to be able to get down to, and again, we're talking about some psychological levels down here. We have 25, let's see, 25 is sitting right here, right? 25 flat. Right now, currently, that's only 83 pips away, hitting the 25 mark. The 125 is a huge psychological number for the dollar CAD. The daily ATR in the dollar CAD is about 85 pips. Yeah, it's 85.2 pips is the daily ATR for the dollar CAD. Right now, from where we are right now, down to 125, it's 88 pips. You can sit over here, 88 pips. So we are one daily ATR from a huge psychological number. And again, oil continuing to kind of spike. It's up 3.88%, up at 81.55, because again, a weaker comment from Fed Chief Powell, again with CPI. So API oil inventory report tomorrow morning. This one is going to continue to move. Now, dollar Swiss. Again, all it did was drive back up at 9 o'clock. At 10 o'clock, it got driven down. There was nothing down here looking for a target. So again, I would expect this one to rally higher. We were looking for this one to get up a bit higher to 92.88 before news. It didn't. It kind of pushed down and came back up. So it was where sellers were. I'd say dollar Swiss, if we're able to break through a small level here, it's shown us that there are some buyers here. If not, it would have went lower. If price is able to kind of jump through, again, I'd look for this to kind of retrace back down again. We'll see when we get down there again, but I would say they're looking for a potential short, you know, tomorrow, later on this week, maybe. Yeah, you can see a 1 to 3. There's plenty of room to the downside on this one. So if you guys know how to set alerts, drop an alert into this one. Horizontal line, drop it right at the low. Actually, you can put it at the low, but this is going to be a support and resistance trap, right? There's going to be a support and resistance trap sitting right there. Add an alert. Let's do, what is it? USD, Swiss, Harry Potter. And let's draw, I want to know, where is that? Yeah, 50. The 50 is right below it, so people will be waiting for that one. So that's we're probably going to use the 50 as the pull down and then pop back up again. So yeah, so fibs line up on it as well. Okay, I don't need this one now. Okay, so again, that would be a break of 92.34. Okay, so kind of looking for those two shorts. Dollar yen. So dollar yen, again, we're looking for this one to come a bit higher. We were looking for this. We had an alert set up high. It didn't make it. Europeans did nothing but send this straight higher. Europeans stepped into the market here, continued to drive it up, drive it up, drive it up. 6 o'clock pulled back. Again, impulse correction. Impulse all the way up. 9:30, Powell stepped in and then kind of nuked the dollar and just dropped it lower. So I would say I would expect this one to go higher again. The dollar yen is always going to be a little more difficult to play. Why? Because it's the dollar and the yen. Again, they're both affected by interest rates and the overall indices itself. So, you know, I'm not really looking to do much with this one until we get up into the 112 or the 115.77 range. Just be cautious with it. Even buy wise, I don't really love a lot in it. So wait till it comes up and we may have potential shorts. So let's talk about oil. So you may look at this and you say, wait a second, we had some, some sellers, right? Yeah, we hit sellers, then we hit sellers again, and then it was kind of like the Europeans were like, oh, we don't know what to do with it. Nothing. Super. This is a super small, tiny box, right? There's our 4 o'clock window, there to there. That's a very, very tiny bit of movement in the European session. And then all of a sudden, Powell talked at 10 o'clock. Yeah, we're not going to do anything. It's okay. Boom, that's what launched it higher. So we know before, looking in the past, right? We have now broken through that 80-50 range. That was a big psychological area we needed to get through. The 80-50, we're through. We're up at 81.50. It sliced through it like butter, right? Let's see now. I'm going to pull it to 4 hours so we can see a lot. You can see that, again, this is on a 4-hour basis. The last time that we had sellers in this range, and again, it's probably a little bit there. I'd have to dial in a little bit more on that one. I'm not sure. This is back in November. This was the last time we had some. Actually, let me see. Maybe I can go back that far. Yeah, I can see. I was trying to get a really kind of small. I really can't shrink it that much either. I don't know. That's the correct one. Let me see. Hourly, can I get it? I can. Let's see. I still can't because it's all wicks. What I can do is I can mark this here. Let's change this to red. And I know there's another pretty clean level. It's a cleaner level than this one, is why I'm kind of marking it off. Oops. All right, so we know, actually, we know that's what we've run into. So what I'm kind of thinking right here is we know we have a cleaner level up at 81.87. Okay, we've kind of smashed into this level now. We've pulled back and kind of smashed into it a little bit. I'll put it on a 30-minute, maybe a little bit clearer. Yeah, you can see we kind of pulled back and we started to form a base here. So there is a racetrack scenario. There is a short opportunity coming in. The API oil report in a few hours will give us a lot of kind of a take on what we should be looking for this one. But with such a big burst higher, again, that kind of gives us a little bit of a foreshadowing. Driving price higher before kind of an inventory report day typically leads to somewhat of a reversal. Now, for oil to come down, we're going to have to see a smaller than expected down draw, right? And we know that right now, let's see if they've updated it. Right now, yes, it looks like, and again, this is brand new. We were clicking it before. It looks like they're calling for a minus 2.1 again, which is the exact same thing that it was last time. So again, last time the number was way, way off to the downside. Where this could be now is I think it could be the other direction. I think it could be a big pop to the top side. So API should give us a little bit of a read into that one. I would say if we come up and the way that this is basing in here, if we can form this, although I'd love to say, hey, let's get short oil. I think if we get some basis in here, we could have a pullback and we could have a punch much, much higher, because looking at these levels, you can see if we break this level, there's a little hiccup there, but again, the next time we have really big buyers coming in or big sellers coming in where it's a true tested kind of, oh, can we go higher? No, right? We're up at 84.50. 84.50 is only $3 from where we're at right now, or the peaks from today. And oil inventory, morning, we can have $2.50 like nothing. So, yeah, we could $85 oil. Oh, that would be so horrible. Oh, that would be rough, right? There goes my $3.19 a gallon for gas. Yeah. So, yeah, I would say look for some basing. If the Europeans are using these two levels as a bottom, if we don't see an immediate reversal this afternoon, if we don't see this coming back down again from now till oil closes, and instead we start basing and chopping up all the buyers in this area, I would say look for a potential long opportunity tomorrow from oil inventory. And again, look at API for later on today. That will help us. Natural gas also going higher. And again, I expect this. Natural gas, I would not be willing to short this one. Again, there was a bit of a pullback. Their inventory is Thursday. Until we get to 425, I'm not interested in shorting. There was an article this morning about, again, we're going into another kind of record cold week. That should drive the price of natural gas higher without a doubt. So again, natural gas, be very, very cautious. It will move tomorrow a little bit. Thursday, the inventory report for natural gas, expecting another buying opportunity, but we're 2 days out, hard to do. Gold, why is gold spiking? Again, because pushing all these raising interest rates off leads to more inflation, which again, gold hawks, gotta love it, right? Gold hawks. Again, we were looking for them to drive it higher. Again, the Europeans caught it right. The Europeans pushed it down back into that level. Again, we came back in and there's that base, right? We broke through the basing level we talked about, off to the races. I would say look for a top. Probably here, right? The 78, I'm not as worried about. I'd like to see a top. I wish we were higher. I would like to get it short from that level. That level's coming in up here at 1822. But right now, everything that Powell said is only going to increase inflation. So again, we don't need this for a short. The Europeans already pushed it down from that level. Right now, I would say the racetrack is rough because it doesn't give us a lot of selling. But I would say if we can get up to 122, and again, if you guys want to mark off on a visual level, CPI is coming in right there, right? CPI with increased CPI, again, if they raise interest rates, it should crush gold down tomorrow. So we'll see this, but again, this is all Powell. Silver, same exact thing. Powell slowing it down. It does have a level actually. We should shrink this level to there, a little bit higher. See if we can get silver to kind of retrace and push down a little bit. So silver's at a level, and again, it was unable to break through. We got the racetrack there. I'd say the next level, again, for CPI tomorrow would be either of these two levels. If we can get to either one of them, I think are both shorting opportunities. Again, move this over to 8:30 tomorrow morning, which would be right there. So we'll see. But on it, again, purely technical analysis base level, we should be rolling back down from this 2275 mark. So cryptos also are up a bit, right? Cryptos are higher. Why? Again, gold is higher. It's all, they're going to let inflation run. Great. Let's go risk on. Bitcoin up, Ethereum up. You can actually see even AMC is up a little bit, but and bonds also up, and Dogecoin is all up. And the reason why is because, again, risk on, baby, risk on. And you can see how much of a spike that had, although it's still up on the day. So overall, that's it. Again, CPI, PPI are going to be absolutely two monster readings this week. Again, I would look to trade crude oil. Again, follow CPI tomorrow. It's before obviously crude oil. But the things you need to watch out for is the API inventory report, CPI tomorrow, PPI on Thursday, and again, retail sales on Friday. So every morning, boom, 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 8:30, 8:30, 8:30. Plan your trades, watch your exits, and again, that's how you guys are going to play the rest of the week. That's it for today. Mark your calendars for next week, Tuesday, January 18th at 12 p.m. We will get back on for another kind of weekly assessment. If you guys are around, make sure you guys catch the morning sessions every day where we cover what's hot in the markets. If you have any questions for me, you're more than welcome to shoot me an email, support@keeptrading.simple.com. You can check us on YouTube, both mine, Keep Trading Simple, or check us out on Nadex's. Or again, check out the website. And again, thank you for joining us today. I'll catch you guys tomorrow morning. Take care.